right, we're 4:30, check, radio check. If somebody in the audience wouldn't mind typing into chat that you can see my screen and hear my voice, we'll go ahead and get started. This is audience, there we go. And we got Caitlin, good, thank you very, very much. And we'll get started. So it's maybe a light crowd today. Summer is upon us. Really the market updates are here for just sort of a rear view of Monday day quarterback type approach towards investing. And as I look at the landscape, and today was a downward pressure on the market after some successful runs. Before I get into that, though, I just really want to just share with everybody out there that's listening, and just how close to we were to, as a country, being without direction or having chaos. And I can't believe that I saw that on live TV. I was watching, and to see, and forget about what your political affiliations are, but just the series of errors that seem to have been committed in the security of a past and potentially a future president. He was not only hit, he was a quarter of an inch away from being deceased. And and just now, as I think about it, I'm ex-military, and I understand accountability. That was something that was drilled into our heads. And I look at just the sort of the chaos surrounding that. It's You had a shooter that was on a roof with malintent. But the thing that really, I guess, pisses me off is that we already had credible threat that Iran was already threatening to have an assassination attempt against him 2 weeks earlier. So because of that, right, how is it that this person was seen, identified, and the president was allowed, or former president was allowed, to go on stage? I think we as American people need to be allowed to ask these questions, and we deserve answers. So that's it. Just say a prayer for our country, because things could have been different. And markets, we will move forward. But that, to me, was just absolutely, in my lifetime, I've been through two: Ronald Reagan, the attempted assassination of him, and now Donald Trump, the attempted assassination of him. And we need to be one country. You can disagree, you can not necessarily buy into everything that somebody says, but we need to be free thinkers, and not necessarily listen to the rhetoric. And I think there's a lot of that on both sides. So make your own decisions, do your own research, and hug the ones you're with, because at the end of the day, I believe that we get one chance on this planet, and like that, as quickly right in front of my eyes, it could have been a different world. So we do this every month, and it's a rear view look. And if and you've been on my call before, you know that the indices for 1 month, we start at the beginning of the month, and they're color coded. And the S&P, right? The spider is using the SPY as an ETF, is won the day, right? And then you have the teal green, which is the next one, which is Euro market. So equities across most developed countries seem to be in positive territory. Gold and the real estate came in third. Negative at the is the this is Europe's MSA. Let's see what that is, total return. So that was negative. And that emerging markets, so that was not Europe. Emerging markets is the teal green. So that is China. That is Indonesia. Those are, countries that we've deemed third world, and maybe don't have the most stable of government. Still did well, right? So looks like Europe was under pressure. And then you have the gold, the Russell 2000, which is last month was the tech sector is a Russell, right? So as I come back, I'm sorry, I stand corrected. The Russell is small caps. Sorry, I got a lot on my mind. I was just as I read through it, I want to make sure I articulated it correctly. So, but again, that's 1 month data. Now I'm looking at the whole year to date, and all the economists and everything that I'm seeing, you'll see that on the last slide is that we are in a still, optimistic, right? Everything that's going on in the last week, the markets are continuing to shake off pressure and are starting and continuing to run. So all of our advice is to you need to be invested to experience these gains. And the only cause of concern or caution that I would issue is let's just make sure that once we make it, what can we do to make sure we don't go backwards? So now at the top is the Dow. Or I'm sorry, that was there. It's still the S&P. Timothy Will just hopped on. Say a prayer for his family. So Timothy's going through some things. So as I look at the green and the SPY, and I look at the pink now, which is that's commodity, so that's oil and precious metals, and then we have emerging markets. So those are the three top winners, and the gold at the bottom is the real estate. So that's still not recovered. I was listening to somebody the other day, and they were saying that commercial real estate could make a recovery in some point in the future. Housing is under pressure, but the commercial real estate I think might be opportunistic in the next 2 to 3 years, depending on what they do with it. So overall, what's my takeaway from this call is that this next slide, the green line all the way to the right. Remember, this green line, when we have it, means that three indicators have given us buy signals, and we call these the three wise men. And basically, that just says, hey, we basically have tailwinds now. We have right now, diversify. If you're still working, dollar cost average into the market. Being in the market should offer greater growth than typically a fixed or a more conservative investment strategy. So, again, I am happy to say that right now, God willing, that our country is, is at a transition point. But the equity markets, the stock markets, investments in general, right now seem to be healthy. Although today we did have some volatility. But remember, this is looking at June, and I think you can look back and go, yeah, June was a pretty good month. I know I was running, I was busy, I was traveling, I was in Alaska. All these things as I look at it and I go, and as I look forward, if I saw areas that I would, I'll have conversations with my client, de-risking portfolios, taking risk off the table. Right now, though, I believe that we need to be in the market and equities need to be part of our holdings, and we don't want to be reactionary. We don't want to have that chicken little the sky is falling, because right now, to me, I still feel we have tailwinds right now. So when I look at the income portfolio, so that means to me that either somebody is more conservative in nature, that they're looking to, like I use the term the milk cow. We need to create yield. We need to have money coming in on a consistent basis. And in 1 month, the good news here, everything in the bond market was above the zero line. So that's good. It's not tremendous. I couldn't retire on it, but it's still positive, and that is good news. And then, as you look at it, the only thing that I think that I would that was above the zero line is the pink, which is high yield muni bonds. So high yield. So that just tells me as I look at this chart that the hunt, if you're on an income portfolio, you're an institutional investor, you're the big boys, you're looking to provide income for people that need it in their portfolios, depending on what their investment objectives are, is that they are trying to do so and they're increasing the risk of the portfolio. When you see that word high yield, that you can substitute with the word junk bonds. And even though it's in governmental munis, right? Munis just typically, depending on whether they're state or federal, right, that they can have tax advantages, are typically for the high net worth clients. So if people are trying to get yield in the bond market right now, you probably have saw you know, a little bit of haircut in your income. However, the next slide shows good news as well. We do have upward trends, you know, and what that tells me, if the Fed comes through and starts to cut interest rates at some point, that you know bonds have an inverse relationship. So as interest rates start to fall, anybody that's in bond holdings now will see their portfolios grow. So it just depends on what you're doing and why. But overall, my analysis of the last month is that things are going well. The only thing I would say here, when I come back to the growth indices and we're looking at the SPY, understand that you know a lot of that return is coming from probably the top 6 to 8 stocks. So because it's market cap weighted, because it's you know, because we're in this sort of inflated valuation of some of these bigger names, you know, Nvidia, Microsoft, Amazon, Meta, any of these things could have a reversal, and that could be problematic. That's why, you know, I am a firm believer of diversification, not just in the SPY is a great index, but we also have to start to look at other ETFs as well that can start to diversify our holdings and even down to the sector. So all these things for me, I think, you know, was good news. So the last thing here is, what is the recession probability look like? Well, you know, we're you know, still above the 50 percentile. It just means it's a coin toss. Is it going to happen before you know, the election in November? Will it be next year? Will it be 2 years from now? I do think there will be some corrective territory that comes, but I don't think right now, based on what I'm seeing, it will be until after the election. And then will it be the end of Q4 or the beginning of Q1 2025? That remains to be seen, and maybe it's second quarter. But right now, I'm comfortable and in guiding clients. Now, next week, we're going to talk about some investment strategies that seem to be very advantageous and highly desired once I explain them to people. So imagine you could create an equity portfolio, an ETF that gives you upside potential, right? So when it does so, but on the downside, it allows you to put in what they call a buffer. So example, and I'll talk more in depth about it next week. I'm still building out the content. But basically, let's say that you had 100 grand and you want to be in the market, and the market, you're in the S&P, you're in the index, the SPY, and what you do is you say, hey, I want to be in this, but we're going to put guardrails in, and we're going to say in every month that you're in this, so maybe it's a July SPY or a an August SPY. Let's say they negotiate a cap of 15%. So what that says is, hey, on the upside, you're going to be capped out. So if it goes up 20, you're only going to get 15. However, why I like it is, let's say it starts to offer protection on the downside. So now instead, let's say that it has a 10% buffer. Basically, let's say the markets go down 8%, you lose nothing. Let's say that the market goes down 20%. Well, then you would have a buffer of 10%. So it means that you would probably only have a loss of around 10%. So we're going to talk more about it next week. I mean, the innovation that is coming from the financial industry needs to be conveyed to the, you know, to the public. And there's a huge inflow of cash into these types of strategy. And that's why I want to offer it to you, because I went to a presentation last week. I had heard about them for 2 years. I've been on the sidelines watching them. I feel comfortable enough that I feel that not only have they figured it out, the options game, but I think it will offer peace of mind to people as they want to be in the market. But remember, you can't time the market, right? It's just Murphy's Law. So this is a way to offer being able to start to get into some of these indices and not have to give back everything that we make. Or if something goes sideways, you can limit some of your downward pressure. Hopefully that makes sense. We'll talk more about it. And then lastly, next on the 27th, right at 9 a.m. I've already registration has started to fill up. Caitlin and Keith and I, Carson has joined us. He's our newest member, but we started seeing the inflow of people taking advantage of this no cost and educational topic on the very complex topic of Social Security, maximizing Social Security. It should be an integral part of your conversation. You should understand it. You should understand how run a model to say, hey, when I turn it on or I elect it, will make a lot of sense. So seating is limited. It is filling up pretty quick. Like I said, the mailings have gone out, and I know that from what I've seen from registrations, both days should be highly attended. And if you know somebody, if you've been to one and you think somebody else should attend, please send them the link or have them reach out to us. So without further ado, I want to thank everybody. Stay safe. And like I said, regardless of your political affiliation, what happened last Saturday has no place in this country. We have to remember that we can disagree, but we are one country, and we need to be the greatest country in the world. We need to come together. We need to not be incendiary and divisive. We need to just help our brothers out and help people out to get to and keep everything that you've built, your family safe, so that it doesn't fall prey to some of the things I see on my radar that have me concerned. So miss you all, love you all. Hope that made sense. Here's our disclosures, and if you have any questions, reach out.